What's up, guys? It's Rob here, and today I'm going to explain to you why I never want to sell stocks and why I would especially not want to sell stocks in order to hold cash. Now, I know it's a common thing that a lot of people want to do in recent days. People have gotten very worried about where the market's heading, and a lot of people have been selling their stocks and fleeing to cash, and I'm going to do my best to explain why I don't think that's the best idea. And I'm going to do it by showing you two charts, and these charts are going to pretty much prove to you that cash is not as good of an investment as stocks or other assets. And I'm not doing this to convince you in any way to continue holding if you don't want to. None of this is financial advice. I'm just giving you guys my honest opinion and showing you some of the information that I used to come to that conclusion, okay? So the first thing that you need to know before I show you guys these charts is the bottom line about why cash overall as an investment is not anywhere near as good as stocks, okay? Because at the end of the day, cash is a non-productive asset. You can hold a bunch of cash, and if everyone decides that all they're going to hold is cash, then everyone will have a bunch of paper. If people are holding stocks, then those companies are still operating, and those companies are still producing the products and services that we use every day. So in those two worlds where people are either only holding cash and cash is all that exists, and the other world where stocks and people are only holding stocks and stocks are all that exist, we have a lot more stuff and we have a much more enjoyable life in the one where the stock market exists and where companies are able to operate versus where we're just holding cash and paper that at the end of the day doesn't really do anything for us. Now, that's not to say cash is completely useless. It obviously lets us transact and to store some value that we've earned from working a job. But overall, I much prefer to hold my investments in productive assets that are actually producing things and services that people use and enjoy. Now, the first chart that I'm going to show you is the value of the dollar over time, okay? This is very important to understand, and a lot of people probably haven't seen this chart that since the 1700s just about, we have been falling dramatically in terms of the dollar's value, okay? It's pretty much always falling. We're always moving lower over the long run, and a lot of people seem to flee to the dollar during times of hardship when they're very worried about where the market's going. And overall, they don't understand necessarily that this is what they're buying into. And it's very important to understand when you're selling stocks, you're selling them for cash, right? You're taking this chart over the chart that I'm about to show you. And after you see the next chart, you're probably not going to want to be in this one over the long term. I mean, maybe you can get really fancy with the timing and you can call everything perfectly and you can increase your value by holding during some of these periods where cash does increase, but it's a very tough thing to do. And as of late, it's not been the case that cash has been going up at all, right? Cash is very inflationary. Now, the stock market, on the other hand, you can see since the 1930s has been doing incredibly well. And it looks like a somewhat scary chart to see that in recent years, it's just exploded, right? It looks like it's just exploded. And the reason that it looks like this is because it's tracking the stock market in terms of dollar value. And when you see a 25% increase in stocks nowadays, it's maybe moving from 4,000 to 5,000. That looks a lot more significant than when it's moving from 20 points to 25 points, right? But if you actually turn on the log scale and adjust, you can see that there is a natural, very steady, consistent rise in stock prices over the long term. And what we've seen in recent years has not actually been that insane, right? It hasn't actually been that crazy compared to what we've seen over the long term. In terms of percentage gains in the stock market. A lot of people like to say that stocks have just gotten way overblown, and you can make that argument looking at this chart where it certainly looks like in recent years stocks have exploded, but that's just because most charts are tracking stocks in terms of their cash value and their dollar value, not in terms of their percentage gains. And when you turn on log scale, it's not exactly percentage gains, but it gets you a lot closer to percentage gains than the dollar value. Now, obviously, when looking at these two charts, there is a clear winner in terms of which one you want to hold over the long term. And for sure, there are times when cash will be falling dramatically and the stock market's moving up, and vice versa when the stock market is moving down and cash is actually rising. That is a thing that does happen, but it does not happen very frequently. And overall, you can see a lot of the falls, especially recently in the stock market, have been maybe 50%, at their worst, maybe 50% in the past couple decades. We've seen maybe a couple 50% crashes, really during the dot-com bubble and the 2008 financial crisis. That's when those things happened. The dollar, on the other hand, is perpetually losing far more than 50% of its value over the long run, right? Since 1933, the dollar was valued 20 times more than the stock market or than what it currently is. And the stock market has only been moving up for the most part, right? There have been some brief years where it has dropped. And overall, a lot of people are worried that the stock market now is going to be dropping. But if you look at the past year, we've already dropped quite a bit. And so, in my opinion, if you were going to be selling, if you could somehow magically call the top at the beginning of January for the stock market, then good job. You managed to do it. But as of now, we've already fallen about 20%. And in my opinion, it just does not make too much sense to be selling stocks now and getting in on cash when we've already fallen pretty dramatically. And overall, in the long run, it's a much more clear decision to me that I want to be holding stocks and not cash. But of course, that's just my opinion. I'm not trying to convince you guys one way or another. I'm just putting that out there so that anyone who's curious knows what I'm thinking and has some reason for why I think it. And other than that, guys, if you appreciate that, feel free to subscribe to the channel. Keep in mind, none of this is financial advice. And other than that, I hope you guys have a great day. I'll see you in the next one. Bye.